Okay, good evening, everyone. Thanks for joining. And today, based on some requests, I put together some material on social security basics. Some of you may already be familiar with all these things. Some of these may be new to you.
Nari, the chief guest is here, by the way.
Okay, good.
He's here.
Yeah, very good. So,
Sorry, Nari, I was rushing to attend this. I ate too fast for you.
oh, yeah,
Okay.
I made a lot of sacrificial time also
I
for
know, I know. Thank you.
for
Thank you
you.
for doing
But
this.
I thought it was good. It was a good material I collected. So let me share that.
Yeah.
Right. So let me start. I have used actually a lot of social security slides. Not all of them are social security slides, but I have used some of the standard PowerPoint slides from social security. Right. So ask questions as we go along, but don't ask questions for material I'm going to cover later, right? So ask me question only on the material that I have covered so far. And then once we finish the presentation, if I have not covered something, then you can ask something fresh. But feel free to ask questions, but only on the material that I am covering. Okay, so how do you qualify for retirement benefits, right? So that is the first thing. Social Security has got different components, right? It has got something called the old age survivor insurance. It has got disability insurance. It's even Medicare is some sort of part of that, right? Today we are going to be focusing only on the retirement benefits, which is actually called OASI, old age survivors insurance, right? So basically, when you are working, you are accumulating some money. It's some sort of a poor man's 401k, right? So when you are working, you start paying your contribution 5.3% for this year, right? It has been going up
Isn't
year
that
after
6.2? Isn't that 6.2?
year. Right, yeah. So that is including DI, right? So 5.3 is OASI. I am only talking about that. 0.9 is DI, which is disability insurance. So total is 6.2. Okay. So so as we are talking about retirement benefits, it's only 5.3 plus 5.3. So 10.6% of your salary, maximum taxable is 142,800. Right. So that's the amount they calculate every month, and then they deduct 5.3% from your pay slip towards OASI, which is the retirement benefit.
But you don't have a
Plus,
choice. You don't have a choice on DI. You have to pay 6.2.
I, as I explained, see it very clearly. It's written here. OASI component. That is what we are talking about here. DI. I'm not talking about disability benefits. I'm not talking about divorce and all those things today, right? So I'm focusing on retirement benefit, which is only 5.3% by employee and 5.3% employer, right? So basically, it is very easy to get credit, right? So every 1,300 of earnings gives you one credit. You have to basically accumulate 4 credits per year. So basically, if you get 5,200 per year salary, you are done, right? So that year is counted. So like that, you have to be here in US for 10 years and you have to accumulate 40 credits. So I think all of us will be accumulating that. And we should be 62 or older. Only then you are eligible to actually start collecting, right? So they deduct money when you are working. And then when you are about to retire or when you retire, they start paying you, right? So that is the basic concept of the retirement benefit component of Social Security. So basically, you earn credits and very easy to earn credit. Even if you work part-time or something, then you still accumulate enough credit, 5,200 per year, then you accumulate enough credit for that year, so it counts 10 years. But your actual salary does count, right? Because when they are calculating how much they pay you, they calculate 35 years of highest salary, whatever you have paid, you have paid the tax. Based on that, they will calculate and pay you back, right? So it's basically you're paying the money when you're working and collecting the money when you are retired. So that is the concept of this. Right. So there are some huge advantages of social security. Some people may not realize. So, okay. I mean, you may be getting a lot of money right now when you're working, but you might think social security is not, that much. But there are some big advantages here, right? So it's almost like an annuity payment, right? So they pay you as long as you live. Not only they pay you as long as you live, but also survivor, right? Even after you pass away, they keep paying your social security benefit to your survivor, so your spouse, right? So that is another huge benefit. So even if
Yeah, one thing, Naria, when I was trying to look at this, like, if both of them are working, then the spouse has got the choice to pick.
yeah, I'm going to cover all that. I'm
Yeah,
just
yeah.
explaining
Oh,
the
yeah,
basics,
yeah.
right? So hold on to those questions. So so basically the advantage is even if you have a housewife, right? So housewife also is eligible, right? So when you are getting social security, as long as you live, she is eligible for 50%, and after you pass away, she is eligible for 100%, right? So it has got some huge benefits here, and it's a lifelong thing, right? So you don't have to worry like whether they will stop paying or something. As long as they have money, which we will talk about, right? So they will continue to pay lifetime and longevity insurance, right? So it has got some good advantages, and it is government backed, right? So government can always pay print money or generate funds. There are some things, but it is not like a private sector, so it's government backed. And this is another huge advantage of social security, right? So annual inflation is COLA. COLA is cost of living adjustment. So they match the inflation, right? So even your salary currently, right? So many companies are not increasing of to match even inflation, right? So whereas here they have a huge component of inflation. So that means whatever money we are talking about here, it is on future, it's on today's dollars, right? So even if you are talking about a future benefit, you don't have to discount it. It is not like a constant. Whereas, if you buy annuity or something like that, many of the annuities components are fixed. They are not COLA adjusted, right? So, I mean, there can be some annuities like that, but most of them will have a fixed sum. Whereas here, it keeps going up every year based on the cost of living adjustment. And preferential tax treatment. So this may not be a huge benefit for high earners like us, right? But for lower income families, it is really a great benefit, because for if social security is the main source of income, right? So pretty much they don't tax it. Whereas if you have other income, you have IRA, you have to withdraw, right? So all those things, or other interest income after you retire, then you will still get 15% off, right? So you are paying maximum tax only on 85% of the social security, even at the highest bracket. And it's a steady stream of monthly income. So this is what Srini was talking about, right? So I actually pulled together this slide from today's report, right? So this shows potentially different components of social security, like OASI, which is the old age survivors insurance, that is our focus today, and disability insurance, and HI is health insurance, which is the Medicare, right? So Medicare, as of, can you, who is that? Can you go on mute, please? Who is that?
Whoever is doing the puja.
Pooja, is it? Okay.
It sounds like it. So,
No, I think it's a feedback. Yeah, if you are not asking question, please go on mute. Otherwise, I'll let me mute you. So historically, we have been up to 400% asset backing, right? So asset reserves as a percentage of annual cost, it was up to 400% in 2010, right? But now there is less revenue coming in because more and more people are retiring and workforce is in immigration has been cut down, right? All those reasons, the workforce is coming down, whereas the number of people who are retired is going up, or even if they are not retired, they are collecting social security, right? So because of that, the percentage asset backing has come down from 400 to 300. And if what they are basically projecting is, if it keeps on happening, that there is more revenue going out of the fund, they have this trust fund, right? So they call it OASI trust fund. And if more money keeps going out and less money is coming in, the projected is 2034, 2033, like that, right? So when it will run out, but that means after that, right? So only they have to just collect and then pay, right? So that is why they are saying, like, 70%, 80% or something. But I don't think somebody was asking what is my thoughts on that. My thought is, if you look at DI, right? So DI was almost coming down to zero, right? But then they bumped it up, right? So they bumped it up and it is not going to be in deficit well past 2050, right? So there are ways and a lot of ways you can increase the income, right? So currently, for example, 142,000 is the cutoff point, right? So they can increase it to 200K, 300K, like that. Then, even higher paying people will pay more social security tax, even whether they benefit or not, right? So I don't know, the cutoff, actually it is not a very progressive thing, right? So it is a regressive thing, that the lower people are paying more tax than the higher income people, right? So I mean, the concept is everybody is going to get the same amount of money back. That is why they are doing that. But if they have to raise the funding, that is one way of increasing the tax, right? So there are other ways as well. So I'm not going to get into all that, but I wouldn't worry and make a decision saying, oh, I have to start collecting early because the money is going to run out. I don't think that is going to happen, because social security is a vote winning thing, right? So it is a very sensitive topic for all the politicians. They don't want to screw it up and lose all the old people's vote, right? Because they are the ones who vote more than the younger people. So social
Yeah, that
uh,
salary
uh,
limit used to
Nadia, are you going
be.
to cover how you can get Social Security while working?
yeah, I'm going to cover all that. Yes.
The
So
salary used to be 62,000 something before, Nari. Now it went up to 147.
correct. Yeah. No, I agree. Yeah, every year they are increasing, but I think they should increase it. They should increase it, because particularly if it is projected to lose money by 2033, then they should start increasing it slowly and then get it back into positive. So I
It's
wouldn't,
also,
basically
it's al-
the point of that slide is, don't worry about it. Don't worry about what Srini posted in the WhatsApp group. Just go ahead with
What
this.
was the red graph, Nari? Was that Medicare or?
Yeah, this is health insurance, Medicare.
Okay.
Medicare is going to run out even faster than thing. Okay. So, how there are some terms to know, right? So there are two things I'll be using quite frequently. One is FRA, right? FRA is full retirement age. Full retirement age depends on when you are born. So if you are born between 43 and 54, it is 66. And then it goes up by 2 months for every year. And then if it is 1960 or later, 67, right? I think most of the people in this group, they are in the 67 category. That's what I have assumed in all my calculations. I have developed some complex Excel models. I have assumed for 67 use case, right? So there will be some edge cases that maybe one or two people maybe think, but it doesn't make a huge difference, right? Between 66 and 67. So 1 or 2 months, it doesn't really matter. But this is what is called the full retirement age. Full retirement age is very critical for all the calculations, for all the social security calculations. And another term they use is primary insurance amount, PIA, right? So PIA is the monthly benefit you are eligible to collect at FRA, right? So primary insurance, so it may be different from actually what you are getting paid, right? So if what you are getting paid might depend on so many factors, including when you start collecting. Whereas the PIA is based on FRA, right? So that is all the calculations based on, right? And how are they determining the primary insurance amount? It is determined by your 35 highest earning years. Let us say that if you are born here and you worked for 45 years or something like that, started working at 20 and retiring at 65 or something, then you have 45 years of working and you have paid tax for 45 years. But the PIA is based on the 35 of the highest earning years. But many of us are immigrants, right? We have not been probably here for 35 years, right? Let us say that somebody is here for only 25 years, right? So what they will do is they will calculate all the 25 years salary, right? They will add it up, but they will not divide it by 25. They will divide it by 35, right? So that is how the immigrants get penalized for not being here, and so for social security, right? So even if you have paid taxes for 25 years, they will still divide it by 35. So that is very important point when you are deciding when to retire, right? So
Nari, a quick question here. You are saying 25 years, so you are taking example of 25 years. The 25 years actual salary, for example, the social security limit is 145,000 and I am getting say 250K in a year. So which salary they will take? They will take the
they
social
only the
security limit.
maximum social security eligible. Yeah,
Oh,
they don't care about the Medicare. So if you look at, have you gone to ssa.gov and print your statement?
yes, yes.
Yeah, they in the table they show two salaries. One is the social security tax eligible salary, and then the other is Medicare eligible salary, right? They will take only the social security eligible salary. They will
Okay,
not worry about your actual salary.
okay, thank you.
So they will take your social security eligible salary for 25 years and divide it by 35. So what happens is if you continue working, right? So the denominator is still 35, but numerator will go up, right? Because they will add, if you work one more year, then they will add 26 years of salary rather than 25. And 2 more years, then it is 27 years, right? So that means you want to increase your denominator. Sorry, you cannot increase your denominator, you cannot change it, but you can increase your numerator, which is the top, right, by working more, right? So that actually I have built into my model, Excel model. So
Yeah, but question. Suppose I work for 15 years. That means 15 years gets divided by 35.
yeah, so they will add your salary, whatever tax you paid salary, right? So social security tax eligible salary, they will add for 15 years and divide it by 35.
Oh.
But Nari, there is a cap for the maximum amount that you will get, right?
Yes. So this
So
is the maximum. This is the maximum PIA, right? So if you calculate the highest rate, and then if you calculate at this today 2021 maximum PIA at full retirement age is 3,113. That is the maximum. And
yeah,
Yeah, so that is the maximum you can get.
So what you're saying is technically we won't even get that unless we work for 35 years, is it?
No,
Like,
if you will get something, right? You
no,
will
yeah,
always.
yeah. No, but what I'm saying is like, no, when I look at my SSA, it comes like $3,000 something. But
Yeah.
that basically I would be eligible only if I meet the 35 years of.
Yeah.
So
Correct.
if I'm
That is
going to retire, if I'm done for
exactly.
25 years, then probably I might get only 60-70% of that or
Yeah,
something.
exactly.
Right. Because
Ah.
there's a cap.
So whatever in the statement actually may be misleading. They will put some big number there. But if you look at it, they will say that if you at FRA, right, full retirement age, you will get that. That's all they say. So that is the amount. So you may be misled by that. Okay. So just to get into slightly more detail on how they
So
treat, right?
Nadi, that PFA they could change, or is it fixed?
Their formula is pretty fixed.
No, that
So
67, like 2-3 years from now, they could decide to make a different grouping, or is it?
I doubt it, but anything can happen, right? If
But
they want,
has it always been like this, or has it changed over the
I think
years?
it used to be 66. They changed it a few years back like that.
Okay.
They can change it, yeah. They can change it, right? As the longevity goes up, and also they are running out of cash. They can make it more difficult to collect, right? They can do that. But at this stage, at this rate, I doubt whether they will change this because they have done this. A lot of calculations are based on this, so they might change it. They have to do something to become solvent, but I don't know the answer whether they will change it or not. But everything can be on the table.
Yeah, or they can push the 62 limit. No, they can keep the 67 the same, but
Yeah,
can change the 62.
correct. But actually, that doesn't really help, as you will see. Even if you start collecting later, if you still collect the same amount. Okay, so
Yeah.
Quick question. So from in chart, anybody in the US in 2021, their maximum social security benefit is 3,213.
if they retire at full retirement age,
Yeah, so the maximum I'm saying. So
but if they keep working until 70, it will go up to the because
yeah,
it
3,895.
yeah,
Got it.
because every year it goes up by 8%.
That depends on the cost of living, right?
No, it doesn't go up. That is what this is the slide. I'm going to explain this.
Okay.
Right. So typical full retirement is at FRA, right? Full retirement age, right? But you can retire anytime from 62, right? So you cannot, I mean, when I say retire, start claiming, right? Start in this context, it is start claiming rather than actually stopping working, whatever, right?
Right.
So age 62, when they say early retirement, it means collecting,
That means
right?
no penalty from there. Before that, you will be penalized if you.
No, you cannot, you won't get any money before 62. There is no question of penalty. So there is penalty here, right? So full retirement, let us say if you get 100%, right? So they keep reducing the benefit if you are claiming early, right? For example, if you claim at 62 instead of 66, you will get 25% less per month. But the advantage is you are collecting for 4 more years, right? So you don't know how long you are going to live, and you are collecting for 4 more years. So it compensates to some extent, but your amount will be less. And the problem with this is if you start claiming at 62, whatever amount you get, it is fixed. It will only go up by COLA, right? The cost of living adjustment, but it won't go up, right? So there are some exceptions to that, but we will talk about that, right? And then earnings. Oh yeah, this is a huge point that I have built into the model, right? It is subject to earnings limitation. So if let us say that if you continue to work in your job, right, investment money earnings are not counted. So but actual wage earnings, right? So if you are still working and start claiming, if you get like decent amount of money, you won't get anything anyway. So there is no point in claiming, because they will start withholding $1 of benefits for every $2 above earnings limit of almost 19K, right? So if you get like say 100K or something, you won't get any benefit. So there is no point in even thinking about claiming at 62 if you are continuing to work for a decent salary, right? So that is something we will talk about in more detail, right? And earnings limitation applies to own, spousal, and survival benefits, right? So all those things are subject to this withholding. So because of this withholding clause when you are working, a lot of people, like if you read, if you do your own research, right? So the people will say different things, right? Everybody has got an opinion on when to claim, right? So, but they wouldn't tell you all these intricacies. That is why I went into some details, and I'm collecting all this information and building into the Excel model, which I will be explaining in more detail, right? So this
every other, wherever I saw it's 59.5 is the legally we can start claiming, right?
no, that is you are talking about IRA and stuff.
Yeah, and also, yeah, you're talking about pension fund, IRA, and stuff like that. 401k.
Yeah,
Okay.
this is, social security is fixed for 62. Before 62, you won't get anything. Okay, you make it very clear. So social security benefit, there is no question of claiming before 62, and even at 62 until you reach full retirement age 66 or 66 and a half or 67, there is no point in like claiming if you are continuing to work. If you retire or if you need the money, definitely yes, right? But otherwise, there is no point in that, because if you are working and claiming, they are just going to keep it, and then they will pay you
So
back.
is
So
the passive income counted in it, like rental income, stuff like that?
no, only wage income.
Okay.
But Nari, maybe you will cover later. If we withdraw money from 401k or IRA, that's considered income, I think.
No.
So that's nothing to do with Social Security.
Yeah.
No. That's
But
that 80.
I don't know about that. But anyway, I mean, for our discussion, let us keep it as mainly it is wage related, right? So
Okay.
basically, if you are working, right, if you are working, there is that earning itself. I mean, even whether, see, most of us, right, are professionals. I mean, I don't think anybody is getting less than 6 figures, right? So at that stage, everything will get absorbed in and withheld. But one thing is, with even though they are withholding it, right, they will pay you back. They will pay you back after you reach the full retirement age. So there are some complex calculations and all. Eventually, you will get that money back, but they are just going to hold it. Whereas might as well, and you are losing 25% also here. So I would, my recommendation is full retirement age is one thing we have to consider if you are working. If you are not working, then we can put it into the model, right? So earnings limitation no longer applies, right? So that is a big advantage of claiming at full retirement age. But, and then if you claimed early, you can voluntarily suspend at FRA to recoup benefits. For example, if you claimed at 62, voluntarily suspended at FRA age 66, and began benefits again at 70, you will receive 99% of what you have received if you claimed at FRA, right? But I don't think this is too relevant. Let us not, if you don't understand it, leave it. It is not that relevant. But because they just give you a redo option, right? So they give you an option to change your mind if you have started claiming already. If somebody is in that case, we can discuss it offline, right? And then more than 66 or 67, which is the FRA, right? Delayed retirement has got some benefits, right? So every year they raise it, they raise that amount, the PIA amount, by 8%. 8% raise for each year you delay benefits. Only applies to your worker benefits, not spousal or survivor benefits, right? So this is important. Yeah, because you are waiting until 70 to get that only increases your own thing. It is not going to increase your spousal with the 50% of FRA only, right? And survivor also is 50 whatever FRA only, right? So you may be getting the full benefit of working until 70, but after you pass away, your survivor will get only the FRA benefits.
Yeah.
And there is no benefit of a waiting past age 70. So there is no advantage at all because you're just putting money on the table, right? So maximum you should claim, maximum you should wait is 70, and the earliest you can claim is 62. Any questions on this?
So, let's say if we move to India or something, I could still claim.
Yeah, yeah, you can
Means,
still claim as long as
address
you're US citizen.
the address have to be here, or they would send everything to the foreign address, or how is that?
Yes, you
Your,
deposit bank
your
account.
designated bank account.
Yeah, they will put it in your bank account. So you're talking about US citizen or non-US citizen?
Yeah, US citizen only.
Yeah, US citizen. Yeah, definitely no problem. Okay, so this slightly
Nari, one more question. So what happens if either both of them die before their say before their FRA or before they started receiving Social Security? Their kids or kin or survivors, nobody gets anything. If
No,
both
nobody gets.
No, they have some children thing and all that. I didn't study all that, so I cannot answer your question. But
Yeah,
they
for
do.
practical
They have
purposes,
some child benefit.
nobody gets anything once you die.
Yeah.
The Social Security
No.
benefit is valid only
Cases,
while you are living.
general cases, when somebody passes, the worker passes away, the spouse will get the survivor benefit, and the spouse passes away. That's it. So
Unless there are minor children.
correct. There are some minor. That is why I was
Yeah,
saying
there are some.
minor children. There are some cases like that, but I haven't studied that. Okay.
Yeah.
So this is how it is, right? So there are two cases here. FRA is 66 and FRA is 67. So FRA 66, if you claim at 62, then it is the PIA is reduced by 25%. And similarly 63, it is reduced by 28%. And then, but if you wait, right, 67, you get 8% more of the PIA, and 68 you get 16%, 24%, 32%. After 70, it is 70 is the maximum you should wait anyway, right? So here it is similar, right? 8, 16, 24, and here it actually goes up to minus 30. This is full retirement age is after people who are born after 1960, right? So there are some advantages in waiting, right?
Now, one basic question, I'm not sure if you're covering later. If my wife has not worked, so when I take retirement at FRA or at 70, will I get any?
Yeah, I'll be covering the spousal benefits.
Hey, Nari, one question here. Like, no, this start seems to be astounding. So, if I understand what you're saying, is doesn't matter, which time I stop contributing to Social Security. That's a different thing. Either I stop 55, 60, whatever it is. But we are saying, if the person takes from between 62 to 70 on the first chart, let's say 66, the difference is almost 57% in terms of the Social Security contribution. That's what it
Not
takes.
contribution, benefit.
Yeah,
Benefit what you get.
not the contribution, benefit. If I'm
Benefit.
going to get $1,000
Yeah.
on a 0%, then I'm going to get 750 if it is 62,
Yeah.
or like a 1320.
Yeah.
Oh, is that? Wow.
Yeah.
That's a big difference actually. Yeah.
That is a big difference, but yeah, that is where there are a lot of arguments, and I built into the model, Excel model.
But you can take the money and invest it with Nari, and you can make 30%.
Yeah, right. So there are arguments.
You can lose
Arguments
also,
like
right?
that. So that all those things I have taken into the account in the model, right? So basically you're right? So comparing 62 to 70, there is 76% increase, right? 18,000 to 31,000. Yeah. Okay. And cost of living adjustment, right? COLA, annual inflation adjustment to social security benefits. All the recipients receive the same COLA percentage, but obviously those with the higher benefits receive a larger dollar increase, right? So if you start claiming at 62 and you're getting 18,000, COLA will be 2% is only 360. Whereas it's just a simple arithmetic, right? So 31,680, your COLA will also increase. Eventually, I mean, because they want to keep that as a constant, right? So 31,680, you want to start claiming, they want to make sure that you get at least that much purchasing power throughout when your lifetime. Okay, withholding, right? So withholding, we already talked about it, right? Under FRA for the full year, first $1 of benefit withheld for every $2 in earning about 17,000. So if you get like a 6-figure salary, then everything will be withheld, right? And just they have some complex rule for just on the year of the FRA. It's not that relevant. And then month of FRA and beyond, no earnings limit and withheld benefits are paid back monthly, right? So whatever they withheld, because you claimed early and when you're still working, they will start paying you back. Okay, taxation, right? So this is taxation of benefits is determined by your provisional income. So it is not the full social security benefits will be included. Only half of it will be included, right? So they will take your AGI, adjusted gross income, and then they will add any tax exempt interest like municipal bonds or something, and other things where there are no tax. They will add that back because that may not be included in your AGI. They will add that back, plus they will add half of social security benefit. They don't add the full one. So but this doesn't really matter. I think with our thing, everybody will be, and I think in our group everybody will be 85% taxable even after retirement. So marriage filing jointly, if you get 44,000, more than 44,000, it is 85,000, 85% taxable, right? Where 15% is benefit, right? You don't get tax. But if it's a low income, less than 32,000, is social security is basically the only thing or whatever, right? Then they are not taxed.
Nari, 85% taxable, what it means? Is it 44,000 bracket corresponding tax limit or?
No, what it says is, let us say that if you get say 36,000, let us say you get 3,000 per month social
Okay.
security benefit, right? And that means it is 36,000 per year, right? Out
Yeah.
of 36,000, only 85% of 36,000 will be considered for actual taxation.
So under the normal tax limits,
Yeah, under
tax rates.
tax rate, yeah. 15% you don't pay tax. That's all it means.
Yeah.
Okay.
I think this is at the
For
federal
income
level.
tax. Yeah.
Pennsylvania doesn't tax social security.
Right. Yeah, that's a good point. Okay, so this is actually a break-even slide from Social Security itself, but this is more or less matching with my figures as well. Right, what they are saying is, let us say there are 3 cases here. One start collecting at 62, another at 66, 70, right? So the 70 is meeting 66 at like 79 age. Break-even means after that age, the later is the winner, right? So if you, let us say that if you live up to 90, right? So what they are saying is, as long as you live more than like 79, it is always better to claim later, right? Like 60. So if somebody passes away before that, right, like 75 or something like that, then they would have been better off if they started claiming at 62. But if they're going to live after beyond 80 or something, this is social security slide, right? And they are saying that the 70 claiming at 70 is the winner, right? So
Is there a way when we die? How to
yeah.
know?
So what I did
Subject to
was,
cap.
I did several calculations, right? I have 6 slides like this on different scenarios, right? So the first one is uh, sorry. First one is retire as 62, right? And I am assuming no investment return, right? Sorry, this is not 5%. This should be 0%. So basically, it means that you are just getting the social security and you are probably spending it, or you're putting it in like a bank where you have 0% interest or something like that, right? So I calculated for different starting collecting, right? So this is the age you are collecting, 62, 63, 64. So each of those, this is the age you are living, right? So 62 to 100, I mapped it, and then there are different colors here. So this blue is 62, right? You start claiming at 62, like that. So 62, 63. So obviously 62 you start collecting, and then so basically my analysis, right? So most of them, everything coincides at 79. So after 79, the later claiming always is better, right? So if assuming that you are not getting any interest out of the social security earnings, right? So 79 is the break even point. So that means I sent you that thing where you estimate your longevity, right? So as long as it shows beyond 79, right? Then assuming that you are not getting any investment return, right? 79 is the break even point. So then you are better off waiting and claiming, right? If you are going to live 92, I think some of the people, I said 92, 95, like that, right? So if they are assuming that you are not going, you're going to use up the social security and you're not going to invest it, or if you are going to invest it and you're not going to get any return, right? Then 79 is the break even point. After 79, it is better to claim later, right? Whereas I changed the assumption here, right? So investment return in excess of inflation, 5%. So 5% return, right? So then it changes the break even point. So the break even point now has become 88.5. So it's almost 89, right? So then it really doesn't matter when you start claiming, right? So it earlier you start or later you start, right? So you are going to wait a long time for 70 to catch up, because when you start collecting at 62, you're going to invest and then you're getting a return of 5%. That all adds up, right? That is why the break even point has changed from 79 to almost 89, right? So the ultimately, if you assume that you are definitely going to get 5%, then it doesn't really matter when you start collecting. It's all working out to the same. If the expected longevity is like 88 or 89, but if it is less than that, then it is better to start claiming early rather than later, as long as you are assuming 5% return. And if you are assuming like say 10% return, then 62 wins, right? As long as you are not working or something, right? So this is all the case where you are retiring. Retiring means actually stopping working at 62, right? That is the case. So you have to be careful here, right? So because I have 6 slides like that. I have 3 use cases. This one use case is you are stopping working at 62. Second use case is stopping working at 67, and the third one is stopping working at 70, right? So we are still talking about you're stopping to work at 62. That means you don't have any wage income, you don't have any withholding of social security. You just start collecting and then earning interest on that, right? So in that case, it moves from 79 to 89. Let us look at another use case. This use
Nari,
case,
I didn't understand why, like you're getting only $3,000. What do you do with the investment with the 3,000? What is the interest you're getting? I'm not clear on that.
5%.
Like on the 3,000 that you took?
Yeah, 3,000 per see, this is 30,000 per year, right? Full
Okay.
retirement age. So if you retire at 62, you'll get less, right? You'll get only 75% of that.
I got that. And let's say you are only getting 25,000, but then the 5% return on what, which amount you're talking?
So
25,000.
this assumes that you are investing the full money. You don't need this money for living. You just put it in the bank or put it in some mutual
Got it.
funds or whatever, and you're investing the full money,
Got it.
right? So this is for a use case where you don't need the money to spend. If you need the money, then you have to go back to the original scenario, right? So if you need the money, if you are spending it, then you are basically not getting any interest. This 5 is correct, incorrect. It's 60. Then your 79 itself is the break-even point.
Hey, Nari, one question here. When you say use the word stop working, I decided, let's say 64, I'm not working, and started to collect the funds. Then, due to some reason, after like a couple of years, I started to work because I got a great opportunity. Why to just let it go, kind of thing. So, what happens in that scenario?
So yeah, but then if you start collecting and if you're still not at a FRA, then they will withhold it. Then
So, once you start working, that means that your paycheck is running. Automatically, it disqualifies you from collecting the funds that particular month onwards. It stops right away.
I don't know the intricacies of that, but basically they will stop your payment and they will withhold the payments.
And you'll start contributing also, right?
Yeah,
Obviously,
start
you will be contributing. That's what because you decided to early retire, but then there was
yeah,
a
I think
this
that
opportunity.
is a edge case. I'm sure there are some calculations. I think they have some complex calculations of withholding.
Yeah, but I read, guys, if you do that kind of things, it's so damn difficult to figure out what are the calculations
exactly.
they're making.
Yeah.
And you just forget about calculations, take whatever they give
Yeah,
afterwards.
exactly. They will do the calculations, right?
Yeah.
So
Essentially, can I answer the question?
yeah, okay.
Say just let's use some figures here. Say you are collecting 3,000. You stopped working 62, and you qualify to collect 3,000 a month. Let's make that assumption, okay? And that means you are collecting 36,000 a year. So you go on doing it one more year, 63, and then 64, and then you got this great opportunity to earn $200,000. Okay, so you take the job. So the $200,000 will wipe away all the 30,000 because Nari showed you some example before that the certain wages like 17,000 or 19,000. Beyond that is for it's 20,000. Then your earning is 200,000. That means 180,000 excess, and $2 to $1. That means 90,000. That wipes away 36,000 you were collecting for the past 2 years. That means they suspend any payment, social security payment, until you reach FRA, full retirement age. But then whatever they suspend is given back to you over the after FRA, however long you collect. They don't give it as a lump sum. They then start adding every month.
Correct.
Do you understand?
Yeah, got it. So
Right,
with that
but
good
the question,
explanation, right? There's a follow-up question that let's say I wait naturally up to FRA, but I'm still able to continue to do the work. I cannot because I cross the FRA age. I cannot get the Social Security in that case also, right?
No,
Until you
after
reach
you
until
after you reach FRA, there is no deduction, right?
or you give up your work after a year, then you get it back.
Yeah, no, like after FRA, there is no question of withholding. They don't
Yep.
withhold after FRA.
So at FRA, if you exercise claiming Social Security, even if you make $1 million a month, it doesn't
Yes,
matter. They pay
correct,
you the $3,000 a month.
correct,
Okay.
exactly.
Okay, gotcha.
Exactly. Okay, so the second use case is retiring at 67, right? So when you're retiring at 67, I'm assuming that all the salary, even if you claim at 62, 63, 64, they are withheld and paid you back, right? So because of that, again, the break-even point is 79, right? So it doesn't really change even when you start collecting. Obviously, the money will be slightly different. Money will be substantially different, but um, it really doesn't change. But here in this case, it even investment return in excess of inflation, even if you take 5%. Earlier it used to be 89, but now it has come down to 83, right? So why? Because of the withholding, right? Because of withholding, even though you are working, right? Here in this case, you are working at 67. If you claim at 62, it is not going to, you're not going to get any money in hand because it's going to be withheld. So all these cases will be withheld. So it makes a difference in the break even. So from 89, it brought 89 break even to 83. So in this case, so if you are working until 67, right? And definitely if you start claiming at 70, that wins in the long term, as long as you live past 83, right? So I think this is a good scenario. I think most of you might appreciate this. I have detailed Excel model. If you don't believe in the calculation, I can explain to you separately if you have a thing, but then I have to charge you consulting rate.
Nari, yeah, can I ask one? So, your model assumed the six-figure salary you mentioned. Is it I mean, our careers when we started, it's not that much, right? We all probably got into
No,
that
but
only.
when you're at this stage, when you are working 62, 65 like that, I'm assuming that your whole money is going to be withheld.
Yeah, what I'm saying is like, for example, let's say we all started at 60K and we ended up at, let's say, 150K. I'm just curious. So you took the average or how does it work?
No, it doesn't really matter when you started or what you started, right? So it matters only what you are collecting at when you are 62, 64 like that. That's all it matters. So
Means
only
like,
for the current
6%
year.
of your average salary.
No, you're getting confused with the two things, right? See, one is the PIA calculation. PIA calculation is average of 35 years divided by 35, right? 35 or whatever amount of years you worked. But the withholding is based on the current year's salary. So when that is what I'm assuming as 6 figures, which will be much more than the withholding limit. So this is just based on your current year salary. If it is more than particular amount, they will not be paying you social security. They will withhold it and they will pay you later.
Okay.
Okay. So this makes a difference, right? So and then the last use case is retiring at 70. Retiring, when I mean retiring means not claiming. Claiming, I have different things here. Actual retiring from work, right? So you are continuing to work in your office until 70. In that case, again, right? So the if you assume a 0%, then it is 78, and if you assume a 5%, it is 83, right? In most of these cases, when you are if you are working 67 or if you are working 70, it is better to claim later. That means it is better to claim at 70, right? Because most of the life expectancy calculations will be past 83, right? So then theoretically it is better to start claiming at 70, right? But there are some other complications like spousal thing and other things, right?
Nary, I'm not sure I'm with you on this, because after FRA, there is no withholding, so you can collect full FRA amount. They're not going to withhold it even if you continue to work.
Mm-hmm.
And so whatever money you collect Social Security, you can
because it is 67 to 70, right? So you only get 2 years, 3 years of interest building, right? So it is not enough to compensate for that like additional amount you are going to get 8% per year, right? So you are going to get 24% extra, right? So it is not compensating. That is why it is break even. It's at 83. Even if you get a 5% interest rate, even then it doesn't have that much of impact. See, when you stop working at 62 and start claim at 62, then you have a lot more year, right, of building up the interest component. Whereas the interest component has got only 2 years, but you are losing 24%, and then it slowly starts catching up, and then even though you are getting 5% interest, it still catches up. The amount they are paying 24% more per month, that catches up, and then you cannot equal that. So, okay, let us look at the longevity calculation, right? So one is the longevity calculation for a single person, but you have to remember that the higher wage person is going to get give the spouse also, right, the benefit after it passes away, right? So basically, probability of, this is a standard slide from Social Security, right? Probability of living to various ages for a healthy 65-year-old couple, right? So they are saying that a man obviously their mortality is higher, and their longevity is lower than women, right? So 75% chance that they will live until at least 79, and 50% chance at least until 87, and 25% until 93, right? Whereas women have a slightly higher one, 81, 89, and 95. 75% chance that they will live to 81. But if you look at either or, right, at least 1% living, right, then it shoots up to 88, 93, 98, right? So this is another reason why you should wait until probably 70 to get, because you're at least 1% is going to live longer, and they are going to collect, right? So I mean, it depends on both their health conditions and all those things, but this is that's why it says healthy 65-year-old couple, at least 1% can live up to 88. There is a 70% chance of that, right? So because we are going to be talking about survivor benefit, that is another reason that it's worth probably waiting, right? So before we get into survivor benefit, let's talk about spousal benefit, right? So these are the rules, right? So spousal benefits, if born after 54, you must file for your own benefit first. I'll assume that most of the spouses are born after 54. That means they have to file for their own benefit first. You cannot just claim that. So spousal payment up to 50% of workers' unreduced benefit. Let us say that your wife is not working, or she was in a low paid job or something like that, right? Then she can get, when you start getting 3,000, she can start getting 1,500 without doing anything, right? She has not contributed to Social Security, right, ever, but she can still get 1,500. So that is a huge benefit again, right? So 50%. But again, spousal payment is reduced if claimed before full retirement age, right? So I think I have a slide showing how much. And if own benefit is more than 50% of the workers, own benefit is paid. Okay, so I'll give you an example, right? So let us say that you are eligible to get $3,000 per month at FRA, right? Whereas your wife was not working for some time, she was rearing kids, and her total salary over 35 years is much less. Then she's getting only 2,000, right? 2,000. She is eligible for benefit. Now, if she was not at all working, she would have got 1,500, right? Because it is the 50% of 3,000. But because she was working, she is eligible for her own benefit, which is 2,000. So they will not pay her both, obviously, right? So they will pay only the higher amount, right? So if her own benefit is higher, they will only pay that. They will not pay the 50% spousal benefit. So basically what it says is she will get only the 2,000 and she will not get the 1,500. Whereas if her benefit is only 1,000 and you are getting 3,000, so 3,000 for 50% is 1,500. So she will get 1,500. Even though her benefit is 1,000, she will get the spouse benefit. Divorced spouse, 10-year marriage, and single, right? So I'm not going to much detail on that. Okay.
So basically, only one person's benefits are coming to a family. That's the way they calculated or put in the formulas, right?
What?
Even though both are working, they are making sure that just one person's benefits are coming.
If both are getting 3,000, they will both get 3,000.
Yes.
No, if one person is not there, then in that case, the person who is remaining, if that person also is a working person in the past, they're technically getting only one person's benefit.
Yes.
Yeah.
Yeah, correct.
That's correct.
Yeah, you cannot claim your own benefit plus spousal benefit, right?
Yeah.
So that is why they have some
So,
complicated calculations, but it's very simple actually.
Nari,
So
so would it be beneficial if one of the spouses, let's say wife, retires early at 62 and the husband works until 70? Is that modeled like
yeah.
that?
There are some use cases like that. I do mention something like that. So let us say spousal benefit computation, right? It actually, this is self-explanatory, but I'll go through it anyway. So Mary's full retirement at FRA is 800, whereas husband's was 2,000, right? So they do all the calculation and then they finally get 1,000, right? 50%. So whichever is higher, 1,000 or 800, right? And 1,000 is more than 800. So whichever is higher, they will pay either her own benefit or 50% of the benefit they will pay. So
Nari, that is only happens when the husband dies in that case, right?
no. Spousal benefit is it's different from survivor benefit.
Oh, okay, I got it.
So spousal benefit is like housewife, right? So if you're housewife, right, she did not work for a single day, she will still get 50% of your benefit.
So $2,000 in this case husband gets, and $1,000 the wife gets. Totally the family gets $3,000.
Both are alive. So
Yeah.
the family will get 3,000.
Okay.
And both are at FRA.
Yeah. Oh, I didn't know this. Okay.
So your wife is worth more for
I
you.
was thinking this whole spousal benefit crap only when you die.
No, you are confusing survivor benefit and
I
spousal.
know.
Now, when you die, your wife gets 100% of yours.
I know.
Sorry, another question. Sorry, too many questions. But so Medicare starts at 65, right? So what I did my research was insurance is at least $500 to $1,000 for us. So did you count that as like combination of these two matters?
Medicare is totally separate. Why are you confusing that
What
with
I'm
that?
saying is, if without insurance, if I'm retiring, like say Medicare only kicks in, I'm working, I'm getting the workplace insurance. If I retire, workplace insurance won't come to me. Then I have to buy outside in the market. I'm just thinking like
Yeah,
holistically.
No, I agree. I mean, that is outside the calculation, but that is an advantage of continuing to work, right? So yeah.
See, Raj, you take with the left hand and give it in the right hand for the insurance, pretty much, right?
I know, but we have to have something. Yeah, we can talk at the end. Yeah.
Yeah, it's basically getting washed away.
Yeah, they make it more unnecessary to start claiming at 62. You know, they make it very
Correct.
yeah.
So this is another one, right? So spousal benefit also, it is not always 50%. 50% only at FRA, right? If you claim at 62, you get only 35% of spouses PIA, right? So they have, and then every month they increase it to 50, right? So from 62 to FRA, they increase it gradually up to 50%.
And I
So
have a question.
Yeah.
If spouse cut at 62, say 35%, as you say here, and husbands claim that FRA, okay, then after the husband dies, will wife get full FRA of husbands, or since started collecting at 62?
No, she will get the full FRA. That is, survivor benefit is always full.
So it doesn't matter when she was collecting her own. Yeah.
Correct.
Okay.
So, but she cannot start collecting unless this person also start collecting, right? So
That's the point.
see,
Yeah.
that is the point here, right? See, married individuals can collect social security benefits on their spouse's earning record if married for at least 1 year, right? So you cannot be a convenience marriage just to get social security. And then at least say age 62 when you are eligible for 35%. And the other spouse has started collecting. She cannot just start claiming spouse benefit with when the worker or the main person is not started
No, I
collecting.
understand that, but I'm just assuming both are collecting, and then
No,
husband.
I'm not telling to you. I'm just explaining this general rule because some people might say, "Oh, why don't my wife start collecting spouse PIA when I can wait and I can hold on?" You cannot do that. But there are some use cases like that. You can start claiming and then you can put it on hold and other things. So those are all some complications. So divorced spouse also can receive benefits on an ex-spouse's earnings record. Married for at least 10 years, divorced for at least 2 years, currently unmarried, at least age 62, and she can start, I think, claiming even without your knowledge. I think I'm not sure about all these things.
So this is for Srini. Srini, your wife and girlfriend both cannot be collected.
But it is confidential. How do they know each other?
Okay, so here they have given some example, right? So I think we all understand that, but FRA they start collecting. So Henry started collecting 24,000, and Lisa 12,000, 36,000, right? But both are collecting at 70 because this one the 31,680, but it is still it is not full 50% because that is maxed at FRA. Okay, this is where Srini got confused, right? Survivor benefit. When you pass away, your surviving spouse can receive your full benefit at FRA, right? So she has to reach her own FRA, right? So if you pass away, then as long as your wife is at FRA, she can claim the full thing. If she is not, if she is younger at age 60, she can receive 71% of the full benefit, right? Disabled 50, even age 50, right? And she can still remarry after age 60 and still remain eligible, right, for survivor. And divorce spouse 10-year marriage required, right? So again, reminder, if claiming benefits before FRA, if she is still working, then the wage earning limits, withholding, all those things will apply. The survivor benefit. Basic thing here is, if when the main person passes away, then the other spouse starts getting the benefit. If her own benefit is less. Yeah, I think this is the same thing. The same example. There's some same things. Okay. Now,
So survivor gets only the higher of the two amounts, correct?
yeah, and not the full. Suppose if you start claiming at 70, right? You might have got instead of so let us say that your FRA was 3,000, right? If because you claimed at 70, you would have got higher amount, like 3,000 times 1.24, right? But
Okay.
she will get only 3,000.
Okay. And if she already was getting something at FRA, that will not.
Yeah, if she is getting only 2,000 at that time until when you are alive, right? After you pass away, she will get 3,000.
Okay.
Okay. So I think we discussed a lot of things. So this tries to summarize when to start claiming, right? When do you plan to stop working, right? So because of that withholding rule, right? So you have to be careful on like starting claiming and continuing to work. And what will your earnings look like after retirement? Whether you have enough money or do you need really Social Security to survive, right? There are a lot of American families, they are waiting for Social Security, and as soon as they become 62, they start claiming, right? Because that is one of the, they don't care about all these calculations. Longevity, how is your health, family history, right? And spousal benefit, what benefit thing, spouse's health and longevity, age difference, and what other retirement sources you have, right? So if you can wait, when you can get a higher amount, right? Every year it goes up by 8%, right? The FRA times 1.08 or FRA times 1.16, like that, right? Whether if you have 401k and other things, you at 70 and a half, now 72 and a half, but you have to start withdrawing from IRA and 401k anyway, right? So all those considerations are there, but my general thumb based on all these things is even if you think you can generate a huge return after inflation, I think because of that 8% increase, it is probably better to wait, think on a personal level, but you have to take into account whether your wife is working, and you have to see how much is she going to get and all those things as well, right? So
Nari, one relevant question here. If I stop working at 62 and start claiming Social Security,
yeah,
if Anu continue working and making money,
yeah,
will I lose my Social Security benefit because our total family income is higher because of that?
no, I think they calculate only your wage income.
Okay, good. Then I will put her to work until she is 70.
Actually, it's a good question. Let us check that. I don't know, because if you are claiming, I don't know the answer. I think that's a very good question.
Your first answer is right. Your Social
So that makes sense.
on your income.
It makes sense, but never know with IRS, right? Because you're submitting joint return.
Yeah. So what does that to do with this Social Security payment?
Yeah. Okay.
So, Nari, can I?
Srini, don't worry, SAP won't leave you.
I
Okay,
don't
stick
know.
with
My
that.
plan is I will retire 62, play golf with Nari, and put my wife to work until 70. Yeah, and she gets me the insurance, and
That's a good plan. I like it.
Srini,
As long as you play golf.
Srini, and also if she works long and she gets the more income, Social Security, you will get spousal
yeah,
added to your Social Security.
So,
that's
Nari,
the big plan.
can I stop working and start claiming my 401ks and IRAs and declare take Social Security only at 67?
Yeah, you
Yes,
work
yes.
stopping working and claiming are two separate thing. You can
Yes.
do there is some dependency, but you can do whatever you want.
At
Just
67, even if you are continue working, it should not affect the benefit you are going to get.
yeah, correct.
Exactly. You can continue working and still get the benefit. That's the main thing, because I claimed at 66 and I worked till 70. So, I mean, there were other reasons for that. But basically, you can earn both your salary as well as Social Security
Yeah,
benefits.
correct. Right. So, okay, this is a IRS slide, right? This is not my slide. So they are saying that you can start when do you start claiming before FRA? Your life expectancy is lower, like we talked about the break-even point, lower earning and younger spouse. You need the income and fully retired and no earnings, all those things, right? Considerations. Whereas generally it's better to wait. They are saying, right? They are saying it is generally a best practice to wait FRA or later. And if you have a life expectancy longer and you don't need the social security, you have other sources of income.
But Nari, keep in mind, you can use your money much better when you are young and healthy. If you start getting a lot of money after 80, you may
Yeah.
not be able to use it.
That's a good point. I was about to go into.
That's a very important point. And you have to take into account, you keep on postponing till 70, and then you earn a lot of money, but then for some reason you're unfit, or you're not able. Anything can happen.
See, if you are
Apart from
if you
that,
need social, I am assuming in this thing that none of us in this meeting really need social security money to survive, right? So you have other sources of income, other investment income or
yeah,
savings.
I'm sure you have 401k also,
Yeah,
and
correct. So in that case, it doesn't really matter. You don't need social security income to spend and thing. You have other things. So I don't know whether that is a big factor. Okay, so those are all the things, and then I do have some appendix. So basically, if you have not done yet, go to socialsecurity.gov and claim your account, right? If you have not done this, it is dangerous because somebody else can claim it also, right? So because if somebody knows your social security number and other things, right? So basically, you secure it and link it to your account and enable MFA, right? Multi-factor authentication also on this account. So and then you can look at the statement, right? So that you can download your statement. I think they used to send it by mail. Now you have to download it. So that gives you details, so like your earnings record, what they think they calculate at FRA how much you will get. Study this, right? So this is they tell you at full retirement age how much you get, at age 70 how much you get, early retirement age how much you will get. They will explain all these things very well. So with today's presentation, you will be able to understand this statement much better. Right.
I think, like you said, Nari, the number they say is a projected number based on if you continue working until
Correct.
67 at this rate, at this level of income.
Yeah. So in the interest of time, I'm not going to explain like restricted application and all those things. But there is some complicated thing here, but we can, if you're interested, we can discuss it offline. I'll be sharing with the deck. And when you're ready to apply for benefit, it is pretty easy. You can apply online or phone, or you can visit the office, right? So I think that's all I wanted to cover today, but I'm open for any questions.
So, Nari, 401k and IRA difference, right? That has been a pondering question for me because when I changed companies, you are on mute, right? So when I changed